Hey everybody, welcome to Sunday. It's Q&A Sunday, and we have a interesting mix of questions today. We'll be talking about motivation, debt, bankruptcy, stop losses, money markets, profit taking. What else? Hedge funds. Is the Bitcoin ETF overhyped? Covered calls, how to place them using mean reversion. And yeah, the dynamics of the cycle we're in and Blackrock's Bitcoin bag. Quite a lot of stuff to get through today. But as you know, this channel is about money and financial freedom, so welcome. It's called Dead Money, and we'll show you what is dead money and stuff to really be careful of. And of course, not financial advice, and all the questions come from Patreon. Let's go fast, and thank you to the mods in chat, K8, TND Tesla, Sean Donnelly, and everybody else. First question is from Jack S. His last post was 10 months ago. I've heard recently of two methods of concern for Bitcoin price manipulation. One of them is rehypothecation, and the other is the use of fractional reserve banking methodology for crypto assets. BlackRock and other traditional finance institutions do seem to have to make their crypto assets available for public scrutiny. Do you have concerns about use of these methods for trading of Bitcoin and other crypto assets by these institutions? So I think I know what you're getting at here. And the question is, do they have the Bitcoin? If they have the Bitcoin, what are they using it for? Let's jump in. First of all, a lot of people are very frustrated about where we are. And I'm going to break all that down and show you exactly where we are in the cycle. But remember, we've had what I call the 5Gs of the apocalypse. They're Grayscale, Germany, Gox, Genesis, US government, and maybe there's some more to come. But all of these have actually hit the Bitcoin ETF hard. And let's get into, first of all, the first concern you have, BlackRock. Do they have the Bitcoin? And are they rehypothecating it? It's hard to tell, but according to Arkham research, this is their bag. And you can see the amount of holdings, 357,509 Bitcoin. And they have spent a lot of time tracking down all the wallets for all the ETFs. So I just saw this recently, and it gave me some comfort that they actually do have it. And there was never any doubt that they did, because BlackRock's reputation of the biggest money runner on the planet, it's too much to sacrifice by playing funny games. Now, getting back to things like paper Bitcoin, yes, that always exists in all assets all the time. It's existed in gold and everything else. So that's just the nature of the beast. But I think we have a bigger problem with the ETFs, and that is this. I think a lot of the volatility is also not just due to the 5Gs here, but also the carry trade. You can see these are the top 25 hedge funds and their exposure to Bitcoin. So they do enter and exit the carry trade depending on funding rates. And right now, funding rates are close to zero. There's not much to be had there. And there's 47,163 Bitcoin running around in these funds, and they're not hodlers. They buy and sell and trade and do the carry trade all the time. That's what they do as hedge funds. It's not like they're holding money for a pension fund or something. And related to that too, the funding arb is basically nothing, 0.0002%. So between that and negative funding rates, there's not a lot for them to do. Therefore, they're losing interest until things go bonkers. And they will. Now, another piece of information which is also happening behind the scenes is whales. Whales have been dumping and stacking. This from HODL 15 Capital, just fresh off the press a few hours ago. They sold a truckload of Bitcoin between 60,000 and 67,000. And guess what? They just bought a lot back again. More than 10,000 Bitcoin. So, and we saw as well, I think Mr. 100 bought 2,000 Bitcoin in 6 days as well. So the whales are back to stacking because the prices are incredible. So back to where we are. People are losing faith because my theory, as I said before, we ran up too early, too fast. And that is the big problem. And then we had the 5Gs happen. So if you look at this from the rational root, if you monitor the pink line of where we are now, that is the 2024 cycle compared to previous cycles. at the little red arrow, that is where we are right now. We're coming back down to earth to meet up with where the other cycles were. But because I believe we surged too high, too fast with Bitcoin because of the ETF hype. Remember, we came from 15,500 straight up to 73,800 in a very short window of time. And it's largely driven, I do believe, by the hypes around the ETFs. And then 5G storm hit, and then a ton of selling, and on and on and on. So that is kind of where we are. So if we compare the 2-year recovery period to previous cycles, we are right on track, ladies and gentlemen. Thank you, Stephen Weston, for coming as well. But the thing is, people want that GRQ. They want the get rich quick. The tourists maybe came in a bit late to the party and are not getting the crazy returns they expected, like when 100,000. But you have to put things in perspective. And as I always say, billions are made in the bear. Next question is kind of related to this one too, but I hope that addresses kind of where we are. I think overall, a lot of questions regarding the ETFs because people are concerned about that. But here, Greg 1, again, this dovetails into the previous question. Were the ETFs the mistake? It seems like the charts are still matching prior halvings anyway, so how are they helping? Could this be why we're seeing more price swings and potential profit manipulation? Again, the same thing, same concern. We've come from 15 to nearly 74 back, but according to this, we're exactly where we were. But what has happened this time, a lot of people are concerned, oh, these ETFs are bad. I don't believe they're bad. So first of all, how I frame these ETFs, one, it does legitimize Bitcoin as a bona fide asset class. Regulatory approval now recognizes it, and now the TradFi world has access, which is awesome. Also, increased regulatory oversight for the whole space. It's no longer run by gangsters. I know people think, oh, Blackrock is in there and they're really bad, but trust me, we've had a lot of bad actors in the space before that too. Also, it is now integrated with TradFi markets too, with derivatives, and it'll bring back some market growth and innovation to the space. So for example, I think firms like Bitwise give a percentage of their fees back to the Bitcoin developers. So they are not a mistake. But I think one of the most critical things to see is this. This is Grayscale and how they lost over 400,000 to Bitcoin since January 11th. A stunning dump of 2/3 of their bag. They had 622,000. Now they've got like 220,000 left. So that has all been absorbed and a lot more in a very short window of time. But just imagine for a second what the performance would have been if Grayscale wasn't dumping 400,000 Bitcoin. That's what you need to think about. And that turd is nearly flushed. So from that perspective, that's one of the big 5Gs. That was a big kick in the teeth. And remember, it's a volatile asset, and there'll always be manipulation, there'll always be paper Bitcoin, etc. Now, related to that too, another Bitcoin question. We'll get them all out of the way fast. This is from Tiberius. Coinbase custodies 2 million Bitcoin. What happens to the confidence in Bitcoin if they get hacked? That's a very easy question. Easiest question of the day. Yay. The answer is confidence would be shattered. That would have a huge impact. That 2 million of the total of 15 million of supply that will ever exist, in my opinion, would be disastrous for the space. And that's something that we always have to be aware of. Now, next question. And this will also dovetail into Bitcoin and profit taking and where we're going, because a lot of people now are all of a sudden super concerned about profit taking because the price went to 74,000, fell back to like 55, 54. In fact, the price as we speak right now is 54. It went down to 53 not too long ago. So people are like really, really afraid right now. And I get it. But I don't think we're out of the bull market by any stretch. So this is from UK Boomer. Having now trialed profit-taking model, my dilemma is when to set the start date. I feel that once I set it for my goals, I must not be greedy and change it. I note you suggest taking a screenshot once you start. Exactly. So I'm going to break down step by step how you scientifically set up your profit taking for Bitcoin with two different scenarios. So first of all, we'll go through this pretty quick. Step one is you pick your trading style, which is based on your targets, risk tolerance, etc. So for example, with Bitcoin, you'd pick very aggressive or maybe aggressive if you're not too aggressive. But of course, it's a very volatile asset. And from this stage, I think we can go with very aggressive. And I'll show you two different scenarios in a minute. Step 2 is you set your exit aggression, low, medium, or high. That is how much you want to take off the table. With assets like Bitcoin, I believe you should still hodl some, never sell all of it, always keep some. And this will help determine that ratio for you as well. And I'll show you with some exact numbers. Step 3 is you set your optimization fit. That can be loose, very tight. You can play with that if you want. I just go with neutral. Neutral's already optimized for me. But if you want to get really sophisticated, you can play with that. And then step 4, the final step, is you set your layers. Again, these are also, the defaults are optimized, but you want to pick how many layers you want. Do you want to go with layer 6 through 10, or layer 5 through 10, or layer 3 through 8? You can pick exactly what you want when you want it. So let's look at two examples. First of all, we'll go with this first. Imagine you have a crazy $200,000 target. I'm not saying Bitcoin will go. My plan is, hopefully, if we're very lucky and everything goes right, we get to 120,000. And if things get really tight, we could go higher. But conservatively, 200,000, some people are talking 200, 250. I just threw this in here for giggles. So you set your 200K target by dialing in the platform. You choose exactly what type of step 1 setting you want, how aggressive you want to be, and what type of recent trend you look at. And that will find out your target. And you can very easily dial it in based on how close you are to the 200-day moving average and your start date. So I basically dialed it here to 200K as level 10. That is the top target. And then I set a very aggressive exit and just 5 exit layers, layer 6 through 10. And here you can see what they are. Layer 10, if we were to get there, would be the 200K level, then 174, 134, 93, and 68.8. Now, the amount that you sell at these levels, the percentage sold, is you sell 6.8% at layer 6, 4.7% at layer 7, and then layer 8, 35.7%, layer 9, 29.5%, and then layer 10, 23.8%. Now, let's go look at another example, which is kind of more where I believe we could go. So layer 10 now, I have low aggression exit. I dialed in the 120K target by just pulling the anchor, and I put in 6 layers instead of 5 in the previous example. And here you end up, oh, I forgot to mention how much you end up keeping here. Here you end up keeping, under this scenario, and it assumes you have 1 Bitcoin, you end up keeping 30.7% of your 1 whole coin, but you took $100,000 profit off the table. And your value held now, if we get to this top level, is $61,000. So think of it that way. You can very also easily calculate your opportunity cost of taking profit, which is always surprisingly low. This scenario, 120,000 Bitcoin, low aggression exit, 6 layers. Here you end up keeping 0.34 Bitcoin, but you took $53,000 in profit off the table, and your value held is 41K. And the assumption for me is my cost basis of Bitcoin is $15,000. So that's basically how you do it. And again, take a snapshot of these layers, the prices, and have your plan. Go into TradingView. You can set your targets. A little alarm bell will go off when you hit these levels, and then you can follow it up with a trailing stop if you want for the percentage of your bag you want to sell. And that's how you do it scientifically. It's not hard. But the thought behind this machinery was extremely difficult not to crack. So big thank you to the data team behind me to make it happen. Next question is from Dig Swimming Dave. Hi, James. I have enough CleanSpark to do a covered call like you just posted. Can you explain? I was thinking January 17th for $20 on Robinhood. So when I sold the covered call, I didn't go out that far. I did sell it, but the price of CleanSpark at the time was above $20. And I took a lot off the table. First of all, let's look at a chart here. This is when to sell covered calls. What I like to look at is what I call mean reversion. And right now, if you look at this chart, on the top left, you'll see the top That's when you sell a covered call, and you sell it out. Whenever you get a mean reversion that is a big spike, multiple deviations from the mean, then you go for it. And you can see multiple ones here, the little red dots at the bottom. We had a massive one back in Feb. We had another one back in April. We had another one back in June. And that was when we hedged our clean spark. Now, you can see where we are now, the green dots. This is when you enter a position. You do not sell a call. If anything, you buy one, buy a long-term leap. But you can see the trend is still down in orange, and we're not near a bottom yet. I have been nibbling, but this thing will turn around, but we need Bitcoin to turn around first, and that may take another couple of weeks. In addition, the covered call you're looking at, the January 2025 $20 call, you can see you get 55 cents for it now. That, for me, isn't really worth it. Like, you're buying clean spark at $8. You can still get 55 cents for the call, which is pretty impressive considering how far it is out of the money. But what you should also look at is where it came from. This thing was selling for nearly $7.50 back in June. And now it's come down to earth. It's crazy. So these things are very volatile, but you want to sell them when they're high, like $6, $5, $7, not sell them when they're 55 cents. And the way you master that is, again, back to mean reversion, wait for the spikes, big volatility spikes. You'll have massive, massive amount of value in the premium you get for selling call options. And that's when you strike, not at bottoms. So hope that helps. Big swimming, Dave. Next is from PG. This is an interesting question. The Tesla valuation model is phenomenal, but have you considered the impact of taxation fully? I find it inconceivable that governments around the world will allow their income tax generating humans to be replaced by 0% tax generating bots. And how does Tesla model look when you apply the same taxation to a bot as is applied to a human worker? So I found this an interesting question. And, when you imagine an enterprise, a company, they make money on profits. The more bots you have, initial upfront investment, it will generate a lot of value, which would be taxed by the governments. They get the money that way too, but I know what you're saying. So first of all, let's look at the valuation model you're referring to. This is the Tesla valuation model, by the way, which was blessed by Cern Basher, friend of the channel. And things get really nutty after 2031, 2032. Things just scale like crazy because bots will be building bots. They'll be everywhere. They'll be able to do everything a human can do and a lot more. And the abundance in the world will be incredible. And of course, I believe, as many others, Tesla is the leading AI company. And as Andrej Karpathy said in an interview just this week, it's not about the AI advantage or the data advantage. It's about how they do everything with scale. Nobody can build a machine that makes the machine. That's the advantage that Tesla do. They do everything with an approach to extreme scale. That's why they will dominate in this space. Now, even, as Cern Basher and I said, even if you said this is off by a factor of 90%, the results are still completely mind-blowing. So this has a bot valuation alone of $121,000 out in 2034. We're going to have more than 10 years. Crazy to even think. But even if you take just 10% of that, you're still looking at $12,000, which is hard to believe. So let's get back to your question, though, for a second, because I did find it interesting. I just tried to, okay, if I was government and I wanted to tax bots, what would I do? So let's look at a human salary. Imagine in the future, average income be $60,000 a year, and the average tax rate is, say, 35%. Therefore, the humans spend $21,000 in taxes. Now, the bot value generation, not salary, but value generation will be at least $200,000 a year. So 3 times what the human will do, because they work a lot longer, a lot faster, a lot more precise. They don't get sick. They don't turn up late, all that type of stuff. And if you assume bot value generation tax, which I just made up, I don't know if it'll ever be a thing, but the fair rate of that would be 10%. And that would get you back to where the human is. So 10% of $200K of value would be $20,000 in taxes versus $21,000 in taxes for the human. However, what actually happens, and I do believe this is true, if there was a draconian government that wanted to tax people on bots and bot labor and unrealized capital gains, people vote with their feet and they leave. And also there'd be a thing, what I call bot offshore arbitrage. People would move these bots to other parts of the world where there is no tax on what they produce. And that's the problem. That's what governments sometimes don't see. If you tax your billionaires and your multimillionaires to death, they leave. They've got the money to leave. And if you tax a big enterprise like this too, they'll put the bots offshore like we've seen for decades now. So again, I wouldn't worry too much about it at all. So, but great question, great thought experiment. And I believe, yeah, bot value generation, maybe 10%. That would be reasonable. If they go beyond that, no. And anyway, the return on investment from bots like robotaxis would be so insane that people will be able to afford paying a little more tax too. Now, next question is from Merriman. This is interesting because we're getting into AI and brains here. And Merriman is looking for additional disruptors. I am a new member of this community, but I followed you for nearly a year now. Congrats on the high quality of the content and taking time, not just to provide recommendations, but expanding them, the rationale. Thank you for that. My question is, one of new disruptive trends, which is at the early stages in robotics. One clear company is Tesla, correct? However, looking for other ways to play this. Can you comment on the segment of robotic chips, analyzing investments like NVIDIA, AMD, Intel, BRN, STM, Qualcomm, etc., especially interested in chips with high ASP and likely to create a wide moat, perhaps the brains of the robot? So there's a lot of stuff to cover here. I will talk, first of all, this is another example of dead money, like the carry trade for the hedge funds. Intel, it's on your list. Let's look at Intel. This is the Intel stock price. Even if you look at the Intel stock price going back 25 years, it's still negative. But I took the Intel stock price and I divided by M2, money supply. This thing has been dead since it began in 1993. This is a scary, scary example of how money can go nowhere and be dead for a very, very long time. Anyway, horrifying to think, going back to 1993, I know of people that still hold Intel stock. Humans, they can't take profits. They can't let go. They say it's going to come back. It's going to come back. We're going to get back to .com days. It's dead, all right? Old companies shrivel up and die. Because they're old and experienced doesn't mean they can stay ahead because they got so much legacy, baggage, tech, debt, all that type of stuff. It just gets them stuck in a quagmire. You're seeing this with Ford Motor Company and General Motors and Volkswagen making cars for 100 years, and they don't know how to make a battery electric vehicle, despite all their experience. This is disruption, and this is so important to understand. But let's get back to some other names on your list that I do find interesting. And I've analyzed them all. We don't have the time to go into a deep financial analysis for all those names. But Tesla is by far and away the real world AI leader. NVIDIA, far and away the best backbone out there. Now, Qualcomm is doing something interesting with their RB6 robot platform. That's possible. And AMD is like what I call a cheap imitation of NVIDIA. Stick with the winners. The winner takes most. It's always simple. So that's Tesla, NVIDIA, and I own both of those. Qualcomm maybe at the RB6, but it is, the Genesis is a telco company, telco chips. I don't know if they can pivot to robots, but we'll see. And AMD, yeah, they're getting there. But again, by the time they get there and by the time they have an equally good product as NVIDIA, will be the time all the excess profits are taken. They'll be too late to the game. And that's just the way it works. Now, I do want to talk about one company, which I think is one that's not on your list, but I think is going to take over. And this is a company called XAI. It is part of, it's one of the Elon Musk companies. Now, what's interesting about this is from Alex here. XAI has built and initiated the world's most powerful AI training cluster of 100,000 H100 GPUs in only 122 days. It's never been done before. It will regularly take a company 2 to 3 years to build out a cluster this size. And initially, Elon went to look outside and get help to do it. And the most optimistic quote he got was 12 to 8 months. He said, screw that, we're going to do it ourselves. And we'll do it in a fraction of the time. Like literally a 12th of the time. That's what we're talking about here. And there's other stuff that's happening. If you look at the synergy between all those companies, whether it's SpaceX or Neuralink, Boring Company, Tesla, Twitter, which is XAI, they will have the most advanced AI. You talked about a brain. Unfortunately, you can't buy XAI unless you got lots and lots of dollars. But that platform will be able to help you speak to your car through a Grok version. Twitter will be your bank. They'll be able to shop for you. They'll be able to save you money. They'll be able to give you financial advice, be able to do everything for you because they have the most compute. And the player with the most compute wins. It's that simple. Well, Elon Musk's words. So I think that's where we are. It would be great if they allowed individual retail investors to get a piece of this. And as soon as something like that happens, you'll be the first to know. So that would be the one I would watch. And that will be the one. The rest of the other players are investing billions, tens and tens of billions. Will they ever be able to turn a profit from this investment? The answer is probably not, because most of it will be commoditized unless it truly is real world AI. Just my thoughts, guy on the internet. Now, this is another interesting question, again on AI from Merkle-Tree. Regarding Elon's quote about the US being on the fast track to bankruptcy, what's the timeline for such an event? And will we see other countries go bankrupt first, such as Japan and Singapore, which have higher debt to GDP ratios? So, let's talk about Japan, a little bit on Singapore first. The Japan debt to GDP is an absolute horror show. This is how it's transformed over the last 30 years. It's got out of control, like from 45 straight up to north of 260 or whatever it is right now. It is terrifying. Singapore at least have the ability to embrace technology and trends. So they'll be fine. Japan has an aging population. Japan has tons of debt. They got a currency. It's in the toilet. It's just, yeah. All these countries who just continue to print, continue to debase their currency. That's why we Bitcoin. Now back to timeline. This is not just Elon Musk who said the US is on the way to bankruptcy, but Bloomberg said chances of US bankruptcy in the next 10 years are 88%. That is, by 2034, there's nearly a 90% chance the US will be bankrupt. But it's okay because they own a money printer and they will continue to print. And we're seeing unprecedented printing levels happening again. We're not even in a recession or a crisis, but the money printing is through the roof. So quick refresher here, we're now at 35.3 trillion. We just eclipsed 35 trillion a few weeks ago, and that's how fast it's going up. The national debt is an all-time high. It's just going straight up. It's not going anywhere else, straight up. Debt per citizen is 104,000. That includes, babies and people that can't work, etc. Debt per taxpayer is nearly $300,000. And the US spending over $100 billion per month in interest. I shared this last week in a video. Daily, the US is spending over $3 billion in interest. That's enough to build 2 Tesla gigafactories, which are the biggest factories in the world and the biggest buildings in the world. Biggest building ever. And that's how many you can build with how much the US is spending on interest a day. It's mind-blowing. And other crazy stuff too. The unsustainable interest is to double. We're now spending 23% of the budget on net interest. That's going to go to 40% real quick, which will far outstrip everything else, like defense, social security, all that stuff. So it's definitely not sustainable. Now, back to your question. Musk statement, yes. Government spending, America's in the fast lane to bankruptcy. Yes, it is. No timeline. Bloomberg says in 10 years, 90% chance. And yeah, the debt situation is crazy. And if the United States was a company, it would be long bankrupt. That's it. They just keep printing money. That's why I keep making videos, so people can protect themselves. Because if you're holding on to cash, Ray Dalio, cash is trash. It's worse than trash. And it's getting worse too. So the debasement is about to go into next level. High gear. Next question, and more AI stuff. tied into Elon. Kyle3466. You can tell what people are thinking about these days. This question is a little silly, but hopefully thought-provoking. Can Tesla be somehow ironically disrupted by AI? Ooh, yes. As I say, everything can be disrupted. And I think they even made movies about it. By the way, I know this movie. I think it's called Terminator. And when I was getting this screenshot here, I noticed the teeth. I'm thinking, what fool put teeth in a robot that doesn't have to eat? It's just the weirdest thing that, I don't know. I just noticed it and I thought it would be fun to bring up. But yeah, that's ridiculous. It doesn't need teeth. Anywho, back to the scenarios for disruption of Tesla by AI and anybody else. Me, I know I'm going to be disrupted, but that's why I'm kind of trying to do as much as I can before, the bots take over. Whether that's in a year or two, it's going to happen. It's already happening. But the scenarios are AI-driven competition. Tesla's rivals could use AI to close the gap or surpass Tesla. Yes. Also, accelerate innovation. You might take Tesla 8 years to build FSD, and maybe next year an AI will help a company build it in 6 months. That's the accelerated innovation that will be empowered by AI as well. Or there could be an AI cybersecurity breach, which could help hackers gain access to all their intellectual property and clone it as their own. So yeah, these are things you always have to think about. Like I've always said as well, some kid in a basement could spin up a new blockchain that could be a Solana killer, using AI and coding. Who knows? We're not there yet. But the same thing, as I always say too, AI could be used to spin up something that could hack, the security of the Bitcoin network. These are things we all have to be worried about. And that's why I say the AI future is both very exciting and very terrifying all at the same time. But the most important thing in investing as well, remember this too. This is from, I think it's Bill Napier. He's a Florida football coach. And he said, scared money don't make money, So you can spend your life worrying about these 1% chance things of happening. Don't dwell on it. Just keep doing your thing and be in the markets. Very important. Next question. This is more money questions. And I love them because they're touching on a lot of macro and AI and future. But it's from It's Prime Time with a little baby beside a Bitcoin cushion. In regards to the $6 trillion currently sitting in money market funds, whose funds are these primarily? If you break it down into cohorts, I can do that. And also, what percentage of these trillions will make it into Bitcoin crypto and over what period of time? Or is it more of a nothing burger? You the man. No, it's prime time. You the man. So this is about 6.3 trillion out there on the sidelines. This is who holds it. You have, and this is as of August 2024, you got about 3.73 trillion in institutional money market funds, and that is about 30%. Retail investors have about 2.54 trillion. That's about 20.3%. Government funds, they make up the majority, about 5 trillion, whatever that is, a big chunk anyway. Government is blue, 40%. Prime funds, again, another big chunk there, but not as big as the others. So the way I see it is, I see it as follows. If we look at history, we can see to try back into what percentage could hit the market. And I think a lot of it will come from the institutional investors and the retail investors. That would be the orange with the, let me get my colors right, with the blue. So nearly 50%, over 50%. Will definitely be put to work. If we look back at history, what percentage could hit the market? I think if the rates go real low, if the rates go back down to say 3.5%, that means people put their money to work again. That means there'll be about 3 to 3.5 trillion will hit the market, maybe 4 trillion again. And as the money printer keeps going, this bucket will get bigger and bigger. So more will be coming into the risk assets again. And the time frame for this is a function of how long it takes them to cut rates back down to that 2.5%, which could take another year, year and a half, and how much could go into crypto. And this is a a wild guess, somewhere between 1% and 5% will go into Bitcoin and crypto. That will be somewhere between $30 billion and $150 billion, which is a lot, an awful lot. 1% of 30 billion is twice what has gone into the ETF so far. So that's my math behind that question. Great question, by the way. Very hard one, too. Next one is from Commando Corey. Grateful for your service, Commando. As a disabled vet without earned income, what good rule of thumb can I follow when setting trailing stops in a retirement account to build a cash reserve in order to increase holdings? So this is interesting. So you've heard me talk a lot about layers. We'll get to that in a second. But the broad rule of thumb for setting trailing stops is if you have a non-highly volatile thing, like I'm talking not Tesla, not Bitcoin, but other assets, typically in their long-term holds, you'd have a 20% stop loss, trailing stop loss. And for your speculative investments, 10 to 12% would typically work for you out there too. Avoid setting stops too tight. You'll just be wicked out of the market all the time. That's what market makers do. They'll go fishing for your stops and then it'll bounce right back up. And you can see that in any chart, any 1 minute chart, day to day. Nothing goes straight up. It goes zig, 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 zig. And that's the market makers wicking out people with their stop losses. Now, what I like to use is layers. So layers are important when you identify medium-term levels of support and resistance. So this is I just pulled up NVDA because I thought this one was kind of interesting. Again, it's been on a rampage, but you can clearly see here on the Lilo model, which is also in the profit taker, that the layer 10 is the top. That's at 150. That's when everybody needs to kind of get out. A lot of people are still very bullish on NVIDIA, but the earnings was great, but the market had even higher expectations. But you can see very clearly, layer 9 is $130, $131, and that's where it got rejected. Not once, twice, 3, 4, 5 times off of that layer level. But the good news is it bounces off level 8, which used to be resistance back in March. And that's about $101. So they're kind of the two layers. And what you can do as well, if you want to add to your bags, you can kind of, especially in a tax-free account, sell at tops like 130 and buy at bottoms like 101. And just do that all the time. Up, down, up, down, up, down. And here you can do it 1, 2, 3, 4 times in the space of 3 months. So that's how you would use layers. And let us know, Corey, how we can help you in getting these tools into your hands too. Let's talk. I think this is the final question, maybe. Yes, it is. Hi, James. I really admire your work ethic and passion, and you have to help, and the passion you have to help the community. Hope you're able to take some time to recharge. My question to you is, how are you able to keep going 7 days a week? You have an amazing work ethic and drive, but how do you avoid burnouts? You mentioned cooking as a way to unwind and anything else. And you really appreciate the content. I appreciate you too. So this is an interesting question. So first of all, I always try and benchmark myself against the best. So if I was sailing competitively or whatever else, I'd look at the best people, and they'd be the people that I would compare myself to, wherever they are on the planet. So I look at myself and I compare myself to Elon Musk. I mean, no other CEO in the world could even manage Tesla because it has so many moving parts. But when I compare my work ethic and output to his, it leads to a feeling of total inadequacy and low self-worth. And that drives me to work hard every day. That's the first piece. So benchmark yourself, see what other people do, and strive to be as good as them. And of course, I am a nothing burger compared to Elon Musk, but I use that as motivation. But there's more, because there's also other levels of motivation. So you never want to let anybody down. I mean, the desire to not disappoint or put out a bad video or bad content or bad information is a very, very powerful driving force. And also a sense of duty motivates me. This is how I want to help as much as I can. And I, every day, put in maximum effort. I would be afraid if I stopped for a day the wheels would come off, and that would be it. It's like a shark. If it stops swimming, it's bad. And I always strive for excellence. And the other key part too for me is if people see me doing this every day, that will motivate them to do the same. Maybe start their own channel, start their own business, put out good quality commitment to their community or their customers or whatever else. So especially for the younger people, because the world will be very competitive in the future. So I think me doing this will hopefully motivate some others too. And your final part of your question, to chill out, I run before every stream to distill my thoughts and also reduce my energy level, or else I'll appear too hyper in a stream. So that kind of helps me cool down. At 6 o'clock every day, like clockwork, I cook. I love doing that. I tune my bikes, clean the cars. I do everything myself. If there's a plumbing problem, electrical problem, I do it all myself. Replace a window, whatever, fix things around the house. And I garden with any spare time I have. And that's how I do it. And also, final thing, we're trying to build as much as we can while we still can to help people before AI in the world takes over. So this is our latest creation. It's one of the legacy things that I can build and leave behind to really help people. And it wouldn't be something like what Elon Musk is creating, but definitely I strive to build things that have never been done before. The hardest challenges that solve real world problems. That's, if somebody else has done it, why do it? But to build unique things that help people is the key. And the best part of the week, we're helping animals. This is Kovu. He's a high content wolf dog, and Kovu's owners released him to a sanctuary due to his unpredictable temperament. He enjoys interacting with his neighbors and is slowly warming up. So we now have a wolf from Wild Spirit Wolf Sanctuary and many others. And tomorrow morning, 7:40 a.m., we get together at 7:30 and talk about the agenda, which is 4:30 Central European time. But DCL will be back with CTO, Mando, and Marty. It's going to be a great show. And I know you're all concerned, but who knows? We're coming into Sunday night, and normally things kick off then too for Bitcoin. But I don't know. Rectember is here. Rectember always sucks, at least until the latter half of it too. So with that, I'm going to do some live questions, everybody. Hope you enjoyed the show called Dead Money. Lots of good learnings in here, as always. And thank you to everybody on Patreon for all the questions. So we have a first question from Charles Kincannon. Best place to put emergency fund for seniors? So I don't do, well, money market would be one thing. I was parking money in JLP, which is a crypto thing that was paying very high returns. That was a safe place. But, normally if you're only getting like 3 or 4% or you're getting 0% at the bank, I don't think much about that at all. And I'm probably the worst person to think about keeping cash. I have been holding cash now for 3 or 4 months, which pains me, but because I know it's a melting ice cube. But I just leave it in. It's in different brokerage accounts, and it earns something. I don't know how much. It automatically rotates into a money market, so that's kind of what I do there. Also, I keep some USDC on Coinbase. I forgot to mention, and that gets me 5% as well. But remember, you're paying tax on that too, so your 5% isn't really 5%. Meta Girl, I thought I read somewhere that our government would consider robots being taxed, so companies would have to pay the government. Yeah, we just went through that whole conversation. When we're going into a world where there will be a lot more universal basic income, there will be less jobs as you have more automation and more robots. There's so many services now that spin up software code automatically for free. You can create any legal contract you want online like that for free. It's quite remarkable. The real next stage will be the disruption of advertising and marketing companies, when you'll have an agent who will be able to find you what you want. Say, I need another black shirt. Agent, find me one. This is my size. It's a Lululemon. It's an adventure shirt. Whatever. Get it cheap, and I need it by tomorrow. And it'll do that, and it'll charge 2%, I think, is the fee for that. So that's what's happening in the world, and it's coming really fast. So AI, robots, automation will replace a lot of jobs. Governments will be forced to pay people UBI. So they're going to have to find a way to tax AI and these bots and these agents and these services. But how much they do, it depends. If they do it a lot, people just, again, go offshore and they'll arb the tax away. Bitcoin Maxi Mike, if you marry your bot, could you claim it as a dependent? That's interesting because, and I could be wrong here, but people in a certain place like China and Japan, they do have agents or bots as partners, like girlfriends and boyfriends and stuff. But yeah, that's an interesting one because, let me see. I don't even know what the pronoun is for a bot. Bot. I don't know. I'm sure maybe this other case too. I don't look into this stuff at all, but I think people have married their cats and dogs too. I don't know. But I think if you're lucky enough to get a bot, you won't be worried about taxes too much. I hope. But that's an interesting one too. That's a very interesting one. There's a lot of philosophical questions that come to mind. And thank you as well for your super sticker. Andy, Papashano, Toss Devon, Tesla Roo, I love that name. Signal 103, Stephen Weston, Bottle Red and Forest M, and from T&D. What happens to Elon's companies if he takes a government position? 100% he'll be super frustrated with the bureaucracy. No, his idea of a government position, it's the Doge, Department of Government Efficiency, I think it's called. It's what the moniker is. Nothing to do with Dogecoin. But what he would do is he'd be like an advisor. You go to a meeting once a quarter for a few hours. You'd have a team in station that will get the answers you need. You'll distill that information in 2 or 3 hours, and then you make some suggestions. It would not be a full-time gig. It'll be like a quarterly meeting for a few hours. That's it. And you've seen how effective and efficient he is. Again, he's an inspiration to all of us to be able to know the ins and outs of his rockets on Starship is just bonkers, as well as know everything else and know how every inch of a production line works within every Tesla factory is incredible. It's mind-blowing. So yeah, don't worry. It'll be a government kind of like advisory role where he'd do a quarterly meeting for a few hours and maybe get on the phone to somebody once a month if something crops up. That's it. But there would be people in the government that he would direct as to the direction. Like I know people like Vivek have some very good ideas too, which includes the 75% number. So thank you everybody for coming. Hope you have a great Sunday. Hope you enjoy the show. The questions were a little bit different today, but deep and meaningful. And I am so looking forward to seeing what they're going to be next week. Don't forget, see you all tomorrow on DCA Live in the morning. And I hope there's no more questions. And that's it. Thank you, TND Tesla and Metagirl and Bitcoin Maxi Mike. Hope you find your new wife. Have a great day, everybody. Bye-bye.